Good morning, traders. This is a live trade recap. I took one trade this morning. It was on CCIV. I have it on video. We're going to go over everything right now. It's an interesting trade. It would have worked out even if I traded it perfectly, if I executed it perfectly. There was a couple of mistakes on my part. I'm going to go over those in detail, and it still hit 2R regardless of those mistakes. So I stopped trading once I get a 2R trade. Luckily, it happened to be my very first trade of the day. So we'll take a look first at the screener that I use. This is how I found the stock. I use the mid-cap screener. Actually, let me see, I adjusted it this weekend. So now I call it the mid-ish cap screener because I widened the criteria. It didn't really make any difference today. I had that set to 2 billion, from 2 billion to 10 billion, and now I have it set from 1.5 billion to 15 billion. So this will get stocks that are kind of heading into the mid-cap range and just leaving the mid-cap range. And if you watch the quotes on each ticker symbol, you'll see that their market capitalization can change throughout the day. So I thought that was, kind of an important thing to at least try out. And the price range, I just have this set now from $5 to $60. It's fairly arbitrary. The $5 is pretty important because anything below that is considered a penny stock. So this kind of keeps you out of those stocks. And after that, it's really up to the size of your account and the size of risk that you want to take on. That can determine the top end of that range. So that's my screener. So let's take a look at the video. And actually first, before we do that, I want to show you one adjustment I made to my plan. I released a video this weekend about my day trading plan for the current market conditions. And I added this pretty long paragraph, for a day trading plan that's long, this weekend after just thinking about, everything that's been going on with my trading and considering the market and all of that. So I said, consider focusing on a single stock. Whenever I use this asterisk symbol in my trading plan, it's kind of me talking to myself. So it says you may miss some big runners, but staying with one stock per day should have a higher probability of a 2-hour trade. That's based on logic and experience, because if I stick to one trade and say the first entry fails, the second entry is more likely to work out. If that one fails, the third entry is more likely to work out, even more so. Of course, all three can fail, and that's why you have a max loss of 3 trades. Once I lose 3 trades, I stop trading. So all of this stuff, again, is just based off logic and trying to focus on keeping the win rate above break even and not so much keeping the number of trades that I take high. So I'm sacrificing the number of trades that I take so that in the long run this plan works out better and it's more likely to be profitable, which is really what matters. It doesn't matter how many trades you take. What matters is, are you profitable? So if you have to take less trades to remain more profitable, then that's what you do. So you can read through that. Let me know if you have any questions on that. And that definitely came into play today. You'll see how I kind of made that part of my trading today. So here is right around the market open. It's 9:30 and 30 seconds. So right now at this moment, I'm looking at the screener on my laptop, and I'm getting ready to put stocks on the list that meet my screener criteria. So you have SPCE, WISH, BNGO. And once these are on here, I check them on the daily chart, make sure they're trading above the 200 MA, or at least showing higher lows if there is no 200 MA line, because maybe it's a newer stock. Then once that's done, I mark out the previous day or pre-market or aftermarket high, whichever's the highest, and then the stock must be trading above that level in order to take a trade or look for an entry for a trade. The other thing is, if the stock, like this one, BNGO, was trading above those highs, but immediately failed, it came down below point A, which is right here of the ABCD pattern, A, B, and then C comes down below that. Whenever that happens, that's a failed ABCD pattern in my book, and I can no longer look for an entry until it makes a brand new high. So now it must break out over this 819. So that's what all that's about. So let's go forward in the video, because none of these stocks were trading above their previous high. So it's kind of an interesting thing. It's like a safety check in the plan. Just because things meet the screener criteria doesn't mean they're automatically going to be good trades to take. So that's why I have that criteria of, well, if they're not trading above their previous high, then there are no trades to take, no entries to look for. So RUN popped up and it made a nice run at the open, but this was trading below the 200 MA. And then SKLZ also popped up, but I missed an entry on that one. The entry for me would have been for the break of that red candle, and it had already hit the 2-hour profit target. So there was no reason to try to get back into that. Once it's already made one successful 2-hour trade, I don't go back and try to see if it can do another one, because that decreases the probability of the trade working out. All right, so let's get to the one that I actually traded. So here it is, CCIV popped up on the screener. And it didn't look particularly exciting on the screener. I think it was up like 4 or 5%, you know, as far as its gain for the day. But the chart looked pretty nice. It was trading above the previous high. And when this popped up, I had immediately looked at it and said, okay, I already missed an entry, but it didn't hit. It was obvious it didn't hit the 2-hour target because it didn't go up high enough. Well, here, let me just explain it. So this is point A. And then point B is the top, and then here is the pullback, which is pretty obvious. So my first entry would have been for the break of this red candle here. And I know what I was thinking. This is the thing about, you know, once you're in the trade, or you're looking to get in the trade, you get these blinders on, and it's very hard to, or it's very easy, I should say, to make mistakes. It's very easy to miss details. So it's hard to see everything, I guess. So this green candle broke out above this red candle. That would have made my stop loss below this candle, and you can see that it never hit the stop loss. So that means that my ideal entry would still be for the break of that red candle. And for whatever reason in my mind, you know, while I was trading this thing, I was thinking, okay, the entry was for the break of this green candle. That doesn't even make a lot of sense, because let's pretend that this entry wasn't triggered. My next entry would have been right here, would have been for the break of this red candle, and then I would have set my stop loss to the low of this green candle. Now that trade did work out too, but you know, I'm just pointing out the mistakes that I made unknowingly, and I've been doing this for a long time now, and I have this system down pretty well. But it just goes to show you, you know, once you realize, okay, I missed an entry, and you start focusing on where your re-entry is going to be, it's just, you know, the adrenaline kicks in, and it's just easy to make a lot of mistakes. So the best thing to do is when you realize you've made the mistakes, which I did once I got into the trade, I realized, okay, I kind of screwed that up. Best thing to do is just to stick to your rules and your plan. So once I'm in the trade, no matter what happens, I set my stop loss to the appropriate level based on my real entry, and I set my profit target based on that risk, and then I just stick to it. So this is where I get in. Let me just back it up a little bit and show you. So I was hovering over this candle thinking that my ideal entry was 26.45, the break of this candle. Obviously, it is above that. So one of my rules in my plan says that if I miss the entry, as long as it hasn't hit my 2-hour target, I can get back in when it comes back down to that price. But I must see that price at the least, you know, as far as it coming back down. So it must come back down to 26.45 or lower in order for me to trigger my hotkeys to get in. So there, you saw it dip down to 26.41, and that's when I triggered my hotkeys. And then I got filled at 26.46. So it was a near ideal entry based on what I thought was my proper entry. And then I raised the stop loss immediately, just in case you end up in a flush. You don't want to take any bigger losses than you need to. So the stop loss is at 26.20. That's 1 cent below this candle. And here I am using the 2-hour calculator, which you can download from the Facebook trading group, Trading Armor. And there, that gives me my profit target of 26.98, I believe. So there you go. And obviously the profit target is above the current day high. And if I was judging my trades, if I was trading subjectively, if I was managing my trades while I was in there, I might let that bother me, you know, and think about, uh-oh, you know, this thing doesn't have that good of a chance of working out. And I might stop out early, leave money on the table, all that kind of stuff. So that's not a good thing to do. Once you're in the trade, you can notice that stuff, but don't let it change your trade. Just stick to your plan and follow your rules. And that's what I did. And let's see what happens. Okay, so now here, this is where I made sure that I followed what I wrote in this paragraph, is I switched my multi-chart page down to 4 charts. That way I could still watch the SPY, the NASDAQ, and my swing trade on SPXL, but I would only have CCIV on the chart. So you could see it kind of, I guess it takes like the top 4 boxes. So I just manually put in SPXL where SPCE was. So you can see here now that I am not focusing on any other stocks to day trade, right? These are just stocks, these are just ETFs or indexes that I watch to see how the market is going. And then obviously I have my SPXL swing trade that I always have open during the day so I can keep an eye on it. But the CCIV is now the only stock that I'm focusing on for day trading. So had I gotten stopped out on this trade, I would have taken at least the next 2 entries if I needed to before the stock hit a 2-hour trade, or either stopped me out on the 3rd trade. Then I would have been done for the day. But luckily, I didn't have to do that. This thing just went to 2-hour, so I'm fast forwarding this, but try to imagine yourself in this trade in real time. It took a little longer for this pop to occur, but I mean, to be honest with you, this is a pretty easy trade to be in. It did pull back a little bit on the second candle after I entered, but after that, I mean, it really rallied nicely. So it's pretty easy to trade to take. Now here's where the challenge would be, especially if you're a newer trader. You have your profit target at 26.98. This thing's bouncing off 26.93 like it doesn't want to go over. What do? Do you bring your target down just so it gets hit and you get out of the trade, or do you stick to your plan, follow your rules? Now if you're a newer trader, you're probably going to have trouble doing that, but if you're a more experienced trader, you will just stick to your plan, stick to your rules. Even if this thing comes all the way to 26.97 and comes back down and stops you out, it doesn't matter. That's your rules. That's your plan. That's what you have to do. Look, there's 26.97. And you can see that I didn't touch any of these orders. And there we go. 26.98. If you have a hard time doing that, just walk away from the screen because you've got your bracket orders out, and they take care of themselves. So the trade is going to do the right thing no matter what. Either you're going to hit your target or you're going to get stopped out. So that's it. Now let's take a look at the spreadsheet really quickly. Since the test trading is in such kind of a at an early stage, now that just added one more trade. We have 22 trades. Look what it did to the win rate. The win rate, this is just the average of these numbers, is up to 0.29%, where 33% is break even. And the win rate of the actual trades is now just at break even. And I should have that in white, but when I do that, it does that. So I just switched it to green. Well, let me just undo that. There we go. So technically this is break even right now, and that's the win rate of the actual number of trades. You can see 7 winners out of 21 total trades. This is the win rate without error trades, and I was debating on whether or not today's trade was an error trade, but let me show you on the chart today, since it actually did go to 2R even based on my would-be original entry. Let me see, where do I have it? Right here. So you could see that I marked this out it's actually in the video at the end. I just didn't show you that part yet. So this is where I should have entered the stock. Even if I missed it, I should have waited until the price came back up to break this candle right here. So the break of that candle is 26.53. That would have happened here. I would have been able to get in on this candle. Right there, 26.53. And then my stop loss would have been just as if I had entered the trade back here. So that would have been the low of this candle, or just below it, 26.19, and then you could see I punched that into the 2-hour calculator. 26.53, 26.19. The profit target is 27.21, and here's 27.21. So you could see that the 2-hour target would have been hit even if I would have gotten the ideal entry or the correct entry, which is a higher risk. Just ended up being that way, a higher risk trade because of this wick. Still worked out, still went to 2R. So based off of that, I decided to track it as a good trade, like a non-error trade, even though there was an error on my entry. The trade itself would have worked out even in the, I guess, worst case scenario as far as the risk is concerned. And you could see there was even room, like if I caught a few cents slippage, it still would have been hit, no problem. So it definitely was a good trade based on the plan. It was an okay trade based on my actual execution. So that's it. So let's see anything else to go over on the spreadsheet. You can see the data that I'm collecting there on it. And that's about it. We made 50 cents off that trade. That's not the point. The point is to collect data to see whether or not this plan is profitable in the long run. So anyway, so far we've spent $1.08 running these test trades, 22 trades later. So that's not bad at all. And here's one other thing I want to show you is I did make a note in the plan. So the proper entry would have been 2653, but I didn't realize it at the time. That's what the ATT stands for. It still hit 2R even from 2653, and that's why I am counting it as a good trade for the plan. You know, obviously for me it wasn't that great of a trade, but anyway, so I think you get the idea. All the numbers are getting better. I mean, this is only one trade. It's only one day. This doesn't mean that all those little adjustments I made are the fix for the plan, but it's a good way to start after making some tweaks. And you could see win rate without errors, 41%. The average of all of these win rates is 37%. And then the win rate, if I've only taken the first 3 trades out of all of these trades, because you could see the last the 4th and 5th trades have been red, and actually there's a 6th trade there. They've all been red, so that's just a interesting data point, and that's part of the argument for adding this to the trading plan. Max number of trades, 3 trades. So that's it. So hopefully this video was helpful to you. If it was, hit the like button. If you haven't subscribed, please do so. If you have any questions about this trade or my plan or anything else, anything regarding Webull, let me know in the comment section below and I'll get back to you. As always, go into every single trade with a plan and follow that plan as best you can. And once you're in the trade, just stick to your rules. Try to use these bracket orders. They're really nice, and they help you fight the psychological and emotional part of trading, because once you have those orders out there, it's a lot easier to stick to your plan. And you should always take your stop losses no matter what. Honor your profit target, and in the long run, you should be green. Take care.